Have a rather full room, and I know people still arriving, so I guess what's going on with the economy is a topical issue for people. Anyway, good morning, everyone. I'm Jim Rooney, President and CEO of the Greater Boston Chamber of Commerce, and I want to welcome you to our annual Economic Outlook event, and it always seems that it comes at an important time, and certainly this year is no exception. We like to think at the Chamber that we feature the most prominent leaders in our region that are focusing on the most important issues of our times. And certainly we all know from our daily lives that the state and the future of our economy is a priority issue right now. I was warned by people that coached me on my remarks to stay away from last week's election. But we are just 9 days from a national election, and we saw from the results of that election that economic issues are top of mind for all Americans, and that's certainly true of the business and community leaders in this audience. So where is our economy headed, and what does that look like here at home in Massachusetts? There's some good signals. Many people let out a sigh of relief when the Federal Reserve cut interest rates last month, and then cut rates again this month. And for those of you that follow activities up at the State House, the Economic Development Bill that we've been advocating for is moving forward. And that will help ensure that Massachusetts remains competitive as other states try to attract our business and our people. But at the same time, we have to think about the headwinds, think about critical issues like housing costs, inflation, immigration, and so many more issues that have an impact on the way our economy performs. So how will consumers and businesses navigate the next year? How will our pillar and signature industries that underpin our economy fare against so many changes and challenges? And of interest to me in particular, what does this mean for our innovation economy and our entrepreneurial ecosystem and the men and women in Massachusetts who want to start and grow a business right here in Massachusetts? What does all of this context of an economy that we have mean to them? So we're in a period of uncertainty, and there are indeed challenges, but the Chamber is still optimistic that the Commonwealth and the people throughout the state can find opportunity and success right here in this wonderful state. So with that, a few notes about the program. The event is being recorded and will be shared on the Chamber's YouTube page. So if you want to share that information with people that might not have been able to make it, they'll be able to view it at their leisure. And I want to give a very big thank you to our partner and our sponsor in producing this event, the annual Economic Outlook, and that's M&T Bank, and Grace Lee, the Massachusetts Regional President and Chamber Board meeting. Please join me in giving a warm round of applause to Grace Lee. So because of M&T's generous support today, we're able to provide this program free of charge and share it with a broader audience. So a little bit of housekeeping in terms of how we're going to execute this program today. We'll start off with some brief remarks from Grace, who will introduce not one but two keynote speakers that we have today. Then Grace and those speakers will be joined by two experts, especially in the space of startup and entrepreneurial activity. So with that, I will introduce those two expert panelists who will join after the keynote speeches, and then we'll ask Grace to come up and handle the rest of the show. So first, Caitlin Reimers-Broom, the Chief Executive Officer at Mass Challenge, will be one of our panelists. Prior to stepping into the role of CEO, Caitlin was the Executive Vice President of Global Acceleration, where she oversaw the Mass Challenge portfolio of accelerator programs. Now, many of you, I'm sure, have heard of Mass Challenge, but for those not familiar, Mass Challenge is a global network of innovators. And the Mass Challenge model is particularly impressive in that it helps to accelerate high-impact startups with bold, disruptive ideas from non-traditional backgrounds. Prior to Mass Challenge, Caitlin led the Impact Laboratory at the Harvard Business School. Next, our panel will include Carol Myers, who's the operating partner at Glasswing Ventures. Again, Glasswing, for those of you that may not be familiar, invests in visionary early-stage founders who push the boundaries of the possibility. In her role, Carol invests in early-stage companies that are reshaping industries through AI and frontier technology. Throughout Carol's career as a market executive, Carol has been at the forefront of major technological shifts that have changed the way that we all work. So we've got a couple of great speakers, we've got a couple of great panelists, and I am going to pass it over to our moderator, Grace Lee, the Massachusetts Regional President and Executive Vice President for M&T Bank, and a Chamber Board member who has a couple of decades of public and private experience. I won't use the number, Grace, because I don't want people to do it to me either. As a leader in our financial services and banking industry, Grace brings a passion for creating a more inclusive economy here in Massachusetts to her work every day. Grace, please join me for the introduction of our speakers.
I appreciate that he didn't out me on my age, because I feel like, really, I'm just a savant and super young, and I just look old. So thank you, Jim. This is one of my favorite events, and I'm so incredibly excited because this building is the building that M&T will be moving in the next couple of months. We're building it out right now. If you don't know about this building, this is an extraordinary, innovative building in and of itself. It is the largest passive housing commercial building in North America. So when you talk about innovation, vision, and community, I think it speaks volumes that we're having this at Winthrop Center, our future home, without any construction bars. We'll move in a couple of months. But M&T is a bank that's 165 years old. We're super regional, and one of our hallmarks is serving the communities we serve. So this event is incredibly important because, the fact that it's free and that anybody can attend and participate through the chamber is very meaningful, because our economic landscape and our ecosystem in Massachusetts is something that everyone should have access to, and it should be something that we're learning from each other from. So, I'm grateful for the opportunity. I think, Jim, you've been the North Star for so many people, and for myself as well. So thank you for your leadership. Thank you for putting on events like this, and thank you for giving banks like M&T an opportunity to really lean into areas that we believe in. One of the things that I get to do is also introduce some of the spectacular people. So when I do these, my favorite things is meeting the panelists, because I have to say, Jim there's no shortage of extraordinary people that Jim interacts with. So one of our keynote speaker is Dr. Spinelli, from president of Babson College, Dr. Stephen Spinelli from Babson. I don't know if you guys heard of Babson, but it just recently ranked as number 2 nationally. So if you haven't heard, that's right, it's homegrown, and I have to say, as I was reading through Dr. Spinelli's bio, there's this perception in academia, that what's that adage, those that do, but those that don't teach. I have to tell you, this is the Renaissance man. He's done everything. He's practiced, he's instructed, he's led, he's innovated. This is the role model by which we all want to make sure that we follow in Massachusetts. 14 years at Babson as a faculty member, vice provost of entrepreneurship and global management, and director of the Blank Center. Lifetime entrepreneur. Dr. Spinelli spent his career intersecting business, philanthropy, and academia in a way that I think is bar none and second to no one in our community. He co-founded, I don't know if you've heard of this, the small little company, but he co-founded Jiffy Lube International. So, I have to say, co-founded Jiffy Lube International and was chairman of CEO of an American Oil Change Corporation. for everything that he's done. I am most grateful that you still give back to the community and you lead with your values, and that you share your knowledge, your passion, and your vision. So thank you for that. And so also with us, we have this extraordinary man that I promised I'd get the name right, Egon Zakrajsek. You should all clap right now. You should all clap. Did I do it right? So let me tell you something. I stressed about this all night, so thank you. I appreciate it. I feel like I should have gotten a standing ovation. So thank you for tutoring me. So Egon, I said I'd say it once only. Egon, he's Vice President and Director of Research at the Federal Reserve Bank of Boston. Egon oversees the work of the research department, including economic analysis for the monetary policy deliberations of the bank's president and the board of directors. Egon's policy and research interests focus on macro finance, banking, I think that's important to me, and inflation dynamics and monetary policies. His research has been published in a variety of academic journals, including the American Economic Review, Journal of Monetary Economics, and the Quarterly Journal of Economics. Egon, thank you for joining us and sharing your insights. We're incredibly lucky, and our former governor used to say this all the time, our richest resource in Massachusetts is intellectual capital. So our ability to access, Egon, Dr. Spinelli, Carol, and Caitlin in one forum is quite extraordinary, and we're incredibly lucky. And I need to underscore again, and it's free. So I have to say thank you, and always thank you, Jim. With no further ado, I'm going to hand it over to Egon so he can guide us through 2025's economic landscape. Thank you.
All right. Good morning. It's a great pleasure to be here. I want to thank Jim and the Chamber for inviting me to speak as a relative newcomer to New England. I've been only here for a year. It's wonderful to meet, so many people and really get to know the community of business and community leaders who are, really contributing and, developing this extraordinary region that I'm very, very lucky to now live in. Before I start, I want to just say all of these, the remarks that I'm going to say these are my own views. I'm not speaking for the Federal Open Market Committee or for the Board of Governors, just so we understand that. Excuse me. What I thought I was going to do for the next 15, 20 minutes is to provide a bit of a context. We have lived through an extraordinary time over the last 4 years. We've experienced an unprecedented bout of inflation. We've had one of the most, global surge in inflation. We've had one of the most coordinated monetary policy tightening cycles ever in modern history. Yet, the economy recovered. So I'm going to spend a little bit of a time trying to just take things of what happened, how did we get here. And I'm going to talk a little bit about the challenges, going forward, what to expect. Is to provide a context. My remarks are going to be largely focused on kind of a broader national picture, and then maybe at a time when we have a panel discussion and stuff like that, I can perhaps, weave in some of the local, intelligence or anecdotal information that we also get from the Federal Reserve through our contacts. So just as an outline, what are we going to do? So taking stock of the current economic situation, we are in a really, really good place, okay? The US economy is at an exceptional place. Inflation, which surged, very high, is now on durable track to return to a Fed's target of 2%. And by, any measure, labor market is what we would call at full employment, right? So how did this happen? Turns out historically, and I'll elaborate on that, this is very unusual. This is really, really, really difficult to achieve, okay? So there were kind of two major factors that I would delineate that kind of helped us get to this so-called elusive soft landing. One is we've had really exceptional positive supply side developments over the last 3-4 years. So the productive side of the economy expanded in a way that was really remarkable. And I'll talk a little bit more about that. And at the same time, what happened was that very, very strong balance sheets of corporations and households manage essentially, on the demand side to smooth the effect of very, very tight monetary policy that the Fed implemented to combat inflation. So the kind of combination, the confluence of these two factors, allowed us to, land this very, very, very large, complex plane, safely on a runway. Now, so what are then implications? Given where we are, what is it that we want to think about? Well, it was mentioned in the remarks by Jim, in the beginning, the Fed has started cutting interest rates. There was a 50 basis point cut in September. There was a 25 basis point cut just at the recent meeting, right? And so what does that mean? The Fed is normalizing monetary policy. It's normalizing the stance of monetary policy from restrictive towards the neutral rate, where we're not this. And this is important if we want to preserve current economic conditions, okay? And then the key track is how low do we need to go? What is this neutral rate, okay? These things where we no longer, either restrain or spur the economy. This is a very, very, very key question, and there's a lot of uncertainty going on. I'm going to sort of discuss a little bit about that. So that's the plan. So let's get going. Inflation. This is 2 lines here. The black line is the headline, personal consumption expenditure, 12 months change. You can see that latest data. It's close to 2% objective. That's the target. That's what the Fed tries to achieve. The blue line, it's a little above, that's the core. That strips out volatile food and energy. That's still a little elevated. Why do we look at core? Well, in general, we think the core is a better underlying trend. So you can think of the black line ultimately converging to the blue line. So there's still some to go, okay? But the core is still elevated, but in general, inflation is, you can see that huge hump. We've had a very orderly disinflation of bringing it back to the Fed's target. So what's going on? If you look under the hood, so I'm going to unpack the core inflation a little bit in these 2 lines. So the kind of maroon line that you see over there, that is just sort of excluding housing. So this is everything but housing. And that is essentially back to what it was pre-pandemic. That's very well-behaved series. Where you see still elevated inflation is the blue line. That's the housing inflation. Okay, that's the shelter, the housing inflation. That's a very, very sticky. If you go back in time, you see how smooth it is, right? It's very sticky, it's very persistent, takes a gradual time. That's fine. We understand the dynamics of what's going on there. This is really reflecting, the pass-through of rent increases, very large rent increases that occurred during the pandemic into shelter inflation. These things take a long time to work themselves through. But the key is the growth of new rents. So the rents for the newly signed, leases and stuff like that are now growing at the pre-pandemic rates. And that means that this shelter inflation will continue to come down, and that will also be helped by the cooling labor market. So we view any kind of elevated shelter inflation, the so-called last mile in housing inflation, really to be just a artifact of past shocks. There's really no new inflationary pressures in the economy that would get us away from that target. So that's the point here. Now, why did I mention in the beginning that this is it's an exceptional time? We have a very, very, unique, we have achieved a very unique outcome, for the U.S. economy. So the chart to the left shows a historical perspective of the federal funds rate, so the policy rate that the Fed controls, against the unemployment rate. It stops in 2019, before the pandemic. And those shaded bars, those are the recessions, the officially dated recessions. So if you kind of stare like that, you kind of see a bit of a phase shift, right? So you kind of see that at times when the federal funds rate, the green line goes up, okay? So we are tightening monetary policy. The black line with some delay also begins to rise, right? So the monetary policy, we end up in a recession. That's the elusive hard landing. It is really, really hard to engineer a soft landing. When you're raising policy rates, tightening monetary policy to slow down inflation, typically you end up in a recession. Okay, and this goes through. I only plotted here from the mid-1980s, but if I go back into the 1940s, this looks the same. And it looks the same for the advanced economies and stuff. Hard landings are really, really hard. The panel to the left now just focuses on the latest period, the last 4 or 5 years of the data. There you can see a big increase in interest rates with a black line, right, as the Fed started tightening policy to restrain inflation. Okay, yet what happened to the unemployment rate? Well, not much, right? It actually kind of came down a little bit, and now it's been, edged up a little bit, but has been relatively flat. Okay, this is historically a very unique experience. So how did we get here? What got us there? Okay, another point that's very important is that this so-called soft landing of being able to bring down inflation without causing unemployment to rise is occurring in a background of very strong economic growth. So what this graph just shows you real GDP, okay? Broadest measure of economic activity. It's in real terms, so there's no inflation, it's inflation adjusted. And what you can see is that there are kind of 2 dashed lines in there, okay? The dashed blue line, the one below, that is the trend growth rate, the rate of a US economy that could grow in a sort of non-inflationary way if I extrapolate the pre-pandemic trend. That ends up being about 1.9%, okay? But that's not the right number to compare. That's not the right benchmark for the US economy. It's not the right benchmark because with inflation coming down and employment stabilizing, it means that GDP, we are growing at about trend, okay? So then if I re-engineer and figure out what is the trend that would be consistent with that observation that I made, we get at 2.4%. That's huge. I might not cite a lot, but we talked about compounding, okay, over time. This is an enormous increase in the natural rate of the growth rate of the US economy. No other economy in the world in the post-pandemic has been able to deliver that among advanced foreign economies. This is a remarkable, remarkable outcome. What accounts for this increased trend growth, the way that the US economy can grow? Well, first, let me turn to supply developments on the on the supply side of the economy. One is we've had an increase in labor supply. Part of that, a big part of it, as you see panel to the left, comes from immigration. Okay, we have a lot of net immigration. So the black line shows the US population growth, and then it decomposes into the organic, the dark portion of the bars are birth minus death. That's the natural growth of the population. And then the light portion of the bars are net immigration, what's coming into the stuff. The reason why it says projected from 2000 is this is benchmarked to the Census Bureau, to the decennial census. But these data are very high quality, so these are not projected. They just haven't been benchmarked to the decennial census. That's why it says projected. As you can see, we had a big increase in population growth coming from net migration. The panel to the right just translates that into the millions of people. We're talking about we have had more than 3, almost 4 million new immigrants coming in, contributing to the labor supply. This is an expansion of the productive side of the economy, and it was occurring at the time when the labor market was very, very tight. It was occurring when the labor market was overheated, yet this allowed firms, I'm sure many of you challenged hiring workers, during this period of time, but this took some pressure from the labor market, kept the wages down, helped with the disinflation process, but at the same time did not tip the economy in the recession. The other positive supply side development, which is even more magical, kind of the special sauce in the economy, or what the economists call, is labor productivity, okay? Just measure that how much we produce per hour of work. How much real output it's produced per hour worked. So this shows, it's an index, so it's like unitless. So it's just in 2017 equals 100. And what you can see here is there's a trend. There's the blue line there, the blue dashed line. That is a kind of a pre-pandemic trend, okay? If I extrapolate it, it doesn't match the data anymore, right? We're way off. So simple calculation tells you that the pre-pandemic labor productivity, which is the key to wages, has been growing 1.15% per year. It is now estimated to be growing at 2%. There's a huge, huge increase in labor productivity. Again, no other advanced foreign economy has matched these kinds of numbers. This is incredibly US specific, okay, when it comes to that. Why did this happen? What causes, and is this persistent? What could happen here? Well, it's tricky, right? So let me unpack this a little bit. So I'm going to look under the hood a little bit. I'm going to look at some key sectors, and I'm going to look at focus sectors that are actually quite important for the region here, for the New England, and particularly for Massachusetts. So the panel to the left shows you productivity, labor productivity in 2 sectors, in the healthcare sector, which is very important in Massachusetts, and then the accommodations and food services, okay? Again, same series, index equals 100 in 2007. What you can see is it was pretty flat before the pandemic. We had a big surge, okay? Well, probably many of you who are in these sectors learn how to do a lot more with fewer workers during the time, right? That is increasing labor productivity, okay? You're producing as much or even more than you did before with fewer workers. They're becoming more productive. The reason is you can see these lines are kind of a flattening out. So this might have been a sort of a one-time kind of a change in the level of productivity. Is this going to persist? I don't know. It's hard to say. The graph to the right looks at another sector that's important, the professional and business services, another big sector. There, you can kind of see the growth rate continues. So there's a lot more momentum going on, right? So there's how this is going to play out. It's actually quite tricky. I am optimistic, and this is one I think is going to be part of the whole discussion that we're going to say, is that one thing that we think is driving this productivity gain is really high rate of new business formation in the United States. Okay? So this graph just shows the number of what we call high propensity business applications. These are applications that have a very high likelihood to actually turn into a business that will then continue to produce. So it's not like just some random application. And you can see how these things have surged. Right? So this is, we think, these new businesses are coming in. They're the ones who are innovating. They're the cutting edge of the productivity things. They're providing the competitive pressures for the existing businesses to adopt latest productivity techniques. This is the special sauce that makes the economy grow. Okay? So there's some real optimism that if this continues, these high rates of formation, we can sustain this higher productivity growth going forward. Let me now turn to the demand side briefly. This is all on the supply side, right? The productive capacity of the economy. But we also had things on the demand side that was working helping, sort of cushion the effect of higher interest rates. On the household, it was very strong balance sheet. So the black line shows the savings rate. The savings as a percent of disposable income. You can see how it surged to nearly over 30%, right, during the pandemic. And of course, nobody's spending. We're at home. There's nothing to do. Your money's sitting in a bank. It kind of came down. Then you had large stimuluses, fiscal stimuluses that boosted savings rate. And if I translate that to the red line into what we'll call an estimate of excess savings, these are huge numbers. We're talking trillions of dollars. This provided huge support for consumption, which is 2/3 of GDP, right, to be maintained by households in light of higher interest rates that they engineered the Fed. Now, but you can see these factors now are gone. They've returned, they've waned, so there's no longer that support to the economy that we had over the past, say, 3-4 years. Same size on the roughly same thing on the business side. This just shows cash to assets, measure of liquidity, right? You can see there's a huge increase in cash to assets. Firms also locked in a lot of low interest rate debt pre-pandemic or during the pandemic. So it was the highest interest rates have. They had a lot of internal liquidity. Their interest coverage ratios were good. They didn't have to refinance debt. So they were able to maintain employees, continue with capital formation, and drive the economy forward. But again, these stocks are being drawn down. Okay, this support is waning. Okay, so what does that mean? What does that mean for monetary policy? One more chart here. This says, we've achieved this all, like I said, at what we call the labor market at full employment. So it just shows the unemployment rate on the left and some other indicators. You can see they're all sort of at pre-pandemic level, okay? This is the other part of the Fed's mandate. The Fed's mandate is to deliver price stability and maximal employment. We are there. Now we need to preserve these healthy economic conditions going forward. How do we do that? We need to preserve it by normalizing the monetary policy stance. That's what the committee is doing. The last 2 cuts that have occurred are about reducing the degree of restraint that monetary policy imparts on the economy to preserve these conditions. Just to give you a sense, what does this mean for the outlook going forward? The panel to the right, the left panel shows a couple dots. It shows what is the blue squares show you what the policymakers, what the Federal Open Market Committee, okay, penciled in September for the end of the policy rate at the end of 24, 25, and 26. Okay? So as you can see, they expect further easing of monetary policy, normalization. But what's interesting is if you look at the triangles, that's the market expectations. That's derived from futures prices and things like that. There's a difference. They go down, but they don't go down as much, right? You can see there's a gap between them, right? So the market expects policy to be eased, but not nearly as much as what was penciled by the policymakers. Why is that? Well, that's that neutral rate. Where do we need to stop? We do not know. We do not know what the neutral rate is. But to give you some example, the panel to the right shows market expectation of what the 1-year rate, which is essentially a policy rate, is expected between years 4 and 5 in the future. So it's like a forward rate. You can see that has gone way, way up. So there's a clear perception that the neutral stance of policy, or where the FOMC will stop, okay, is higher, significantly higher than what it was before the pandemic. Okay? So this is a real idea of low interest rate environment. It's not supported by this data. So let me just wrap up here. Economy is in really good shape. Okay? The dual mandate that the Fed has by Congress, price stability, returning inflation to target, labor market near employment, we're done. We need to preserve that. That is happening by normalizing the policy stance, okay? By making sure that policy is no longer restrictive, but is not affecting the economy. But there's a lot of uncertainty. And as Jim pointed out, the election brought in another set of uncertainty into what this neutral rate stance it is. First of all, labor supply, how that is going to evolve going forward through immigration policy, highly uncertain. Labor productivity, it is really hard to gauge these things in real time. I'm old enough to remember the 1990s, mid-1990s. There was another productivity boom that occurred. That was really, really, really hard to tease out in real time. Okay? The data are revised. There's a lot of noise. It's very, very difficult to do that. Then the other things, fiscal policy, deficits, trade policy, uncertainty, all of those things are factors that can influence and ultimately influence what this neutral rate of policy is, that if we're trying to preserve these conditions, we're going to hit. So that's it. Thank you very much.
Jim is a terrific leader. And Egon, you are absolutely a genius, which means I'm hoping to be the entertainment portion of, so I'm just not going to get to that level in this discussion. And much of what I'll present is my view of the world, and then I'll challenge it and expect you to challenge it too. It is a highly dynamic environment, and even as I write the title to this presentation, I wonder if I'm right about that. I don't know that it's a catalyst for economic success. I'm going to make the argument that it is a requirement for economic success. And again, I'm a hammer. Everything seems to look like a nail to me. I believe that entrepreneurship is the font of all goodness. So you've got to measure my comments with some realities in your own life. You won't often hear an academic say that, by the way. We have this thing at Babson talking about thought and action. And I love saying thought without, I get in trouble with some academics for this, thought without action is frivolous, action without thought is dangerous. So how do you combine thought and action? And it is, I think in the entrepreneurial process, we try to understand what that means. So the real life engagement with the marketplace with an intellectual perspective that says I'm really trying to be objective and rely on data to do that. So you're going to see a mix of this sort of emotional interaction with entrepreneurship and some detail around the kind of scholarship that we're doing. My personal journey is fun for me. It is dramatically less lofty than James or Egan. I'm really good at changing oil. That's not exactly a high-tech kind of thing. But I really did. Lefty, loosey, righty-tighty, I was really good at it. I used to be really good at lifting weights. I still try hard. I'm getting a little bit old for it. But it taught me, the Jiffy Lube thing taught me about the entrepreneurial inspiration. How do you don't have to invent something. You don't have to be a high-tech component to be able to drive value. And it's really interesting in talking to Babson students, they don't see technology as a complicated factor. They see it as a reality. No kidding. So when they're doing things, you'll see in some of our studies, what is low tech, medium tech, and high tech is not as important today as it was even 10 years ago, let alone 20 or 30 years ago. But we also look at an entire spectrum. We have to put a lot of new businesses into the funnel to figure out what are the high potential ventures and what can be really scaled. And in today's world, the issue of scale is on the forefront of almost every entrepreneur's mind. I think that's a really good thing. And we can talk about that a bit. I'm on the board of a company called Berwyn Enterprises. It is by far the largest of the companies that I am engaged with. It is global in perspective, and when we talk about scale, we no longer think of just American. We are thinking on international scale in almost everything we do. We get it from every student. We have business startups at Babson, 18 or 19 years old, who are serving markets across the country and across the world. It's just amazing how that has become an embedded part of the psyche of this generation of learners. And then for me, this is incredibly selfish. As I get old and break down, I'm looking for businesses I can invest in that can help me live longer. Physical therapy is a consolidation, is a roll-up into a franchise, and I find it invigorating to go through the process of startup and growth again. All of that is sort of an underpinning of the thought piece. I used to have the record, and I was very proud of it, for the longest time it took anyone to get an MBA at Babson. I got into administration after that, and then I became president, and I saw a kid that took me 7.5 years. I actually didn't want to finish because it was so cool. I saw a kid that had to go to 8 years, and I said, we got to kick him out. Find a reason to get rid of this kid. And so, there's sort of this progression of understanding of the impact of education, and very specifically, entrepreneurship education. The reason I went to Babson, I lived in Springfield. Anybody from Springfield here? Anybody know where Springfield is? Oh, thank you. Whew. The people in Springfield don't think you know where they are. It was 89 miles to drive. The reason I went to Babson, it was the only school I could find that taught entrepreneurship. Now, everybody, high schools, junior high schools, community centers are teaching entrepreneurship. The spread of entrepreneurship education is a foundational change in education, in the learning of a society. It is a fascinating reality. And it's again, interesting coming from a lot of different sources. It's not just, I'm a fanatic. I admitted it up front. I cautioned you that I would be selling hard because I really believe in it. But it is a broad set of the market that is talking about the ascension of entrepreneurship as a key component to the changing environment we're in. Now, part of it is, are they right? Just because Fast Company or the Boston Globe or the Wall Street Journal says something doesn't make it right. But are they right, and what's the impact of that? And how do we manage that? And for me, what is the educational interface with that? So, you would have been disappointed if I didn't do, I'm a retailer, I'm selling hard here. But it is what is the underlying motivation for this to happen? It was really fun. In the Wall Street Journal, when the article came out, I would encourage you all to read it. It said, top 3 schools, Princeton, Babson, Stanford. Every person who read that, yeah, thank you. Every person that read that said, Princeton, Babson, Stanford. Babson? I read it that way. It was stunning. But it is a recognition that it has become a mainstream phenomenon. I had to come to Babson because I couldn't find anybody that taught it, because most people believed you couldn't teach it. Then it was, well, you can teach it, but only to special people. What does that mean? That's almost crazy. Then it was, you should teach it to business schools, to business students. And then it's, you must teach it to everyone. And I think this is the phenomenon that says you must teach it to everyone. It is an interesting journey and an understanding of a society and of an economy of what is going to drive growth and value. Then, I want to talk about the underpinning of this. If it's important, you should measure it. And 30 years ago, we talked about how to measure entrepreneurship across the globe. It's really an interesting phenomenon. We now have 500 researchers and 120 economies across the globe that we measure entrepreneurial activity, total entrepreneurial activity, the T measure. That has allowed us to see, is this rooted in something, and can it be perpetuated, and should it be perpetuated? This is a chart I like to use to pretend that I'm still an academic, because it's nearly unreadable. But what it says here is that there is a cultural context, cultural, political context that is going to impact the nature of entrepreneurship. If we believe that entrepreneurship is important to an economy, then what is going to drive it either up or down? What are the effects that we're going to have? So if you have on one side the social, cultural, political, and economic context, on the other side, what do you have as outcomes? What we're finding is that in the middle, if you have great education, it works better. We can virtually track the density of entrepreneurship education and the total entrepreneurial activity happening in a country. I mean, that's a clarion call for investment in education. It's also self-serving, but hey, listen, if the numbers work. Now, another difficult chart to read, but I think really important, is what is happening in the spike of scarcity of jobs. I argue with the researchers on this one. It is pretty consistent that people are starting businesses because they think they can make a difference in the world, they can build great wealth, a lot of it underpinning in family businesses, and they can't find a job, so they start a business. What we're seeing in this spike in they can't find a job, so they have to start a business, is they're really more discerning than that. The underlying behavior is, here's the job market, I can do better by starting a business. I'm making a rational economic decision. The risk-return perspective in business startup now is better than a lot of jobs. Now, you're going to have some, for those of you who are executives in companies and looking for employees, you're going to have to think this through. To attract really high talent, maybe to attract any talent, you're going to have to look at how you reward people, and is the risk-return scenario the same? It used to be, I get a job and I can have a 20-year ascension, I can save money, and if you look at the present discounted value, very low discount rate and a reasonably measurable trajectory to revenue, versus a startup that had amazingly high failure rates. And what does that do? Now, if I can say, and I think society is saying, if you start a business and fail, we give you a plus instead of a minus. However you do the grading, that you've learned something that might be important. So understanding that and how we develop jobs, how we reward people, and how we use this pool of an amazing number of startups as a training center for businesses. Not only are you acquiring maybe the business, and probably at a very reasonable value, but you're acquiring talent. And can we measure the talent that you're acquiring when you do that? So 62% of the entrepreneurs said they started a business because of what we call job scarcity, what I think should be called opportunity cost. It's a better deal to start a company. And we're seeing this across a broad spectrum of demographics. It's really interesting how this is happening. It seems to be tilting more and more toward racial diversity. An attitude towards scale is really interesting. A lot of students, a lot of young people are starting businesses, looking at it as in the opportunity cost of, do I do this or do I do a job, and can I scale it? We used to have to spend a lot of time talking about scale. Now we don't have to spend that time. We talk a lot about how you get to scale and what are the ways that we can manage to scale. But the idea of scale and the idea of a global economy is incredibly well embedded in the youngest cohorts that we see. There is, I think, a potential in all of this for a real tsunami of high potential ventures to come out. As we pack the funnel full of new ideas, and we have a mentality that says, I'll keep going with this as long as I can grow it. I'll shift if I have to shift, but scale is important and available. I think that we have an incredible opportunity for business startup to continue and to be a continually more productive part of society. And the trend is earlier. I have to tell you, when we started Jiffy Lube, I think I was 26. I couldn't find another 26-year-old who started a business. Now, we literally have hundreds of businesses on campus with people who are 22 or less, who have started, and by start a business, I mean they have revenue. I start businesses in my mind every day. Do I actually have a customer? That's a different story, and we have hundreds on the campus that are doing it. It's an amazing phenomenon. It'd be hard to have this discussion without talking about AI. I got to tell you, it is a tsunami in an earthquake that is happening. It is almost overwhelming. So the younger you are, the more committed you are to AI. There is no way to avoid this. This is much bigger than the internet. This is much bigger than lifting weights or changing oil. This is, I think, a massive game changer in the economy. And I think it portends well. If you have an entrepreneurial class being grown who says, I can get in and out, but I'm thinking about scale, and now I have new tools for efficiency and growth, I think that is a chemistry that is unbelievable potential. And I think, frankly, in this region, especially with the density of education and business startup, that we could have a second coming of entrepreneurial explosion here. We have a program at Babson. We decided this year all freshmen have to get, all first years, have to get badged in AI. You go through some courses and you have to have some proficiencies, and we'd love to test you. So we test you to make sure that you're good at it. We said you have to finish, it's asynchronous, you have to finish it in your first year. Most of them are done. They started in September, and they're saying, what's next? If I give away money, I could get 100% of them to come and take the money. But telling them they can get a badge in AI, they are dying for it. And how they feel about AI in the workplace. I think you're going to continue to see this grow. I'm having another debate with my colleagues around these numbers. What is an emerging technology, and how does that affect a business? Again, the younger folks they're almost, if this is the right word, personifying AI. It's like it's their friend. They almost have a personal relationship with it, on the edge of a little bit weird. But it is incredibly interesting how they see this as a partner in their business right from the beginning. We're not selling this, we're not teaching that. They are absorbing this as a tool, as an integral tool in the formation and growth of their business already. I don't know one startup at Babson in the student body that isn't incorporating AI. It's just an amazing phenomenon. And they see it as a catalyst for growth. There is an understanding of scale, an appreciation of AI, and an absolute target to grow. It's really interesting too, the whole issue of technology in the workplace. I love saying this to students now when I teach in a class, which I do very rarely, but sometimes. And I said, I used to use this interesting technology in class. It's called chalk. And you would write it on these specialized boards, and then you could erase it. And they said, I swear to you, this year, freshman group says, really? I thought chalk was what kids used on, you actually use that to teach? And then, of course, we went to whiteboards, which some of us still use. And then we went to PowerPoint and Prezi, and now we're using AI and virtual reality in the classroom. We've got a new building at Babson that we said, let's just pour technology into it, see what happens. Oh my God, it is amazing what the students are driving in the classroom in the use of these tools. They're taking that same mentality into the workplace. They expect that as a part of the business model. It is like turning the water on or having a bathroom. You have to be loaded with technology or you're going to suffer a competitive disadvantage. It is an amazing phenomenon. I've never seen sort of the acceptance become so culturally ingrained. We teach a lot about technology and entrepreneurship, and the newer students don't know the difference. They almost refuse to recognize it. Now, here is I think, another difficult to read slide, but for me, really interesting. I think this is a lot of noise in here because people are bringing things to the world that we're calling new because it is new technology, and students are seeing it as just an advance in the delivery of products and services. So I'm less enamored with the pace of technological vibrance. And there is a dramatic increase, I think, in uncertainty about the job market. Even though we're at near full employment, or I think you said we were at near full employment, students do not say, I'm secure. We are not hearing that from our students. What we're hearing from our students is, I got to go create value if I want to have any security. They do not trust the man. They do not trust existing businesses. I don't know that they would actually say it that way, but they believe that they have to take more control of their lives. Again, I don't think that's a bad thing. How this works through the economy and how you make your investments and how this affects your businesses and how you manage your employees, I think you need to pay attention to that if you want to keep that kind of talent. And I will end it with this one. There is for me a sort of concerning moment here where the sort of Maslow hierarchy is tilting toward I got to make money to be able. That's why I'm going into business, not as strongly to affect social change. And it's an interesting find. I try to be objective about it, but I think there is an interesting underlying concern here that we have to pay attention to. What we can say is that the startups into the future, as far as I can see, are exploding and are going to be a more and more important part of the economy. So I think entrepreneurship is business education. I think if you don't have entrepreneurship education, you don't have a fulsome education. I've gone that far, and I don't question whether it is. I know that it is a catalyst for economic success. So thank you for having me here, allowing me to rant.
Thank you. We're going to move on to our panel part, and I have to say that I'm glad this is recorded because I'm going to review both the keynote speakers, because Egon and Dr. Spinelli, that is dense information that is so incredibly valuable. My takeaway is, this is, very, very cliff notes. When Egon, you were talking about, historically, there were certain indicators that we would always look at, right? And so that was true when we were here a year ago. We looked at, high interest rates, we looked at, consumer spending, and we looked at low employment rates. And we kind of did our analysis on that. We looked at, stabilizing inflation through those metrics, right? And so, as I'm just going to go right into it, as I'm listening to Dr. Spinelli, the dynamic nature of our workforce and in our economy has kind of changed, the rules of engagement. So, so I'm going to start with you, Caitlin. Last year we looked at those indicators for, economic forecasts. I think, Caitlin, you're in a very unique position because you are a convener. You bring companies, you bring investors, not just from Massachusetts, but globally. So, when you look out into the areas that, you're interacting with, what are you looking for as economic indicators? Because what I just learned is the old rules no longer apply. So and I'm gonna say, I kind of look at different things as well, just as for a gut check. So I gotta think we're all doing this. So Caitlin, what are you looking at?
Great. Well, first of all, thank you, both the keynotes, for just an extraordinary presentation and for hosting us today. I think we at Mass Challenge have the benefit of sitting at the front line of just those high propensity businesses that you were talking about, and so feel very optimistic about the level of energy, the new business starts globally, the quality of ideas, and the spread of talent. I think a couple of key things that have been on our mind and our radar, I think one is here local to Massachusetts. Are we continuing to see the level of inspiration to action into really high potential businesses coming out of our extraordinary universities? And the answer is most certainly yes, and I can speak more to sort of how widespread it is across the industries that matter to our economy, but also really matter to the world. But also, are we attracting to Massachusetts talent that is elsewhere? Those ideas are being fostered in other ecosystems, but want to connect into our economy. And the answer is absolutely yes. I think whether it's across Asia, Africa, Europe, there's amazing growth of activity. Dr. Spinelli sort of highlighted it, but also real interest in connecting into the mature ecosystem that is Massachusetts, the talent that we have here, the knowledge, the pattern recognition, the capital. And so I think that those sort of two, I'll stop there. I think we can go into more, but is there continued activity and is there interest in bringing that to Massachusetts? And we feel pretty positive about that.
Thanks, Caitlin. So Carol, you are on the forefront, and you have to look at indicators because that's one of the criteria by which you invest. And I know Glasswing has been looking at AI before anybody was talking about AI. So what are the things that you look at for economic indicators, but also for when when you're investing and you're looking at opportunities, because the landscape is rich with opportunities. How do you know this is going to be the unicorn, or maybe not be the unicorn, but it's my, this is my steady horse that we have to back?
Yeah, it's great. And we sort of just set the stage. We would probably come in a little bit after Mass Challenge, which is very, very early stage, but we're very early stage, we're at the seed stage. And so obviously we're looking at all the basic economic indicators that are out there. We're also looking at what's happening within specific industries. Where are there huge opportunities for AI to come in and to make advancements, for sure. And then we're also looking at the ecosystem that is venture. So it was wonderful to see, Egon, the contribution of new businesses to the economy, which I think we all know. Venture, by the way, is just a tiny slice of that. There are millions of businesses that don't ever need venture capital, never should take it, and are huge contributors to our economy. But if we look at the Magnificent Seven, for example, they all came through this route. So it's really important that we have a healthy venture ecosystem. Boston is fortunate to have, even through the last few years, remained like number 3 or 4, typically in venture within the US, which is pretty remarkable for a city that's, 25 or 26 in terms of population in the US. But what we've seen is a continued formation, and I think we saw some of that in the data that Egon shared, but we've seen a little bit of a decline in the subsequent rounds that a company needs to have to scale. So there's a little bit of a backlog. We've seen lower IPOs, we've seen lower M&A than we had in the past. And those things are really important because that's what feeds back into the cycle. So they start with Kate, they come here and get some money, and then they need to continue to raise. But right now it's a little bit tougher. And then they ultimately need to get acquired or have an IPO, so we return funds back into the cycle to start new businesses. So we're going to be looking to see what happens, in those areas, and does some of that free up and start to get that flywheel going again.
Thank you, Carol. So I'm going to go to the academic. Dr. Spinelli, as I'm watching, as I was listening to you present, while, the fundamentals are always required, you got to watch your P&L, make sure you've got your foundation right. It looks like the rules of engagement are changing, right? So when you look at, the landscape, especially in Massachusetts, and, we are very blessed because it's an entrepreneurial rich environment. Thank you very much, Dr. Spinelli. What are you seeing, and, do you see any pivots as a result of the economy? I mean, one, what are you looking at for economic indicators that impact, entrepreneurs and, your institution?
Yeah, clearly we're seeing more small startups. The question for us, for me, is will those startups grow in a natural course of action? Will the top of the funnel lead to more high potential ventures? And do we have a capital problem to get them to that next level? My bet is that it's a temporary hiccup, and that may be just glasses half full kind of thinking. But if we can parse the massive deals we have in a sophisticated way, and then fund them, that we have a much bigger input of high potential ventures, and that will restart the flywheel that you're talking about. I think it's a relatively temporary phenomenon. A lot of that depends on how good a job you do.
Can I add one thought to that, which is I think it's both capital and customers. And so I think the last couple of years you've seen huge pressure on financial institutions, healthcare institutions, and others who, for at least many of the companies we serve, are the target customers. And so as companies are under pressure to demonstrate organic growth in addition to with support of venture capital, that pressure on the institutions has also in some cases caused a pullback with the exception of AI. I think we're starting to see that come back, particularly here in Massachusetts. We're excited about that, but it's both the capital and the customers that I think we need to be at the table.
I'll throw one more variable in there. The level of productivity is dynamic. People are saying, okay, I'm using AI more, I'm being forced to be more productive by my capital source, I'm looking for those advantages, and I think the investors are saying, is that sustainable? And if it is, there's going to be another round. If it isn't, then we're going to wash out some of you.
And so, I know, Egon, you are next. So, because there's only one question my husband asked me to ask you. He's like, okay, we can continue to have interest rates that go down. And the reason I bring that up, and I'm like, I can't ask that, but I'm asking it. The reason I bring that up is because, the element that is always vital to assessing the economic health is the customers, consumer spending, consumer confidence. And that often is tied with interest rates, right? So, I am asking, are we going to continue to see them down? It'll be your opinion, not anybody else's. We won't hold you to it. And I'm joking about that, but sincerely, like, there traditionally has been, additional consumer confidence coming with interest rates that decline, because then you can pay down your debt, you can, buy more. The inflation should, kind of coincide. But as I was watching your chart, that may not be true, and it hasn't been true. While the soft landing has occurred, the rules of engagement, again, seem to be a little bit more dynamic than I feel comfortable with. What are you guys kind of looking at? You can speak for Egon, not the Federal Reserve.
Of course. You're absolutely right. The U.S. GDP, 2/3 of it is personal consumption expenditures. That's kind of the key part, right? So, what has supported this resilient consumer spendings we have seen so far? Well, certainly, interest rates were not a help, and that's part of it. The Fed deliberately raised interest rates to restrain the demand, to try to bring down inflation. The factors that have supported, I mentioned, was a lot of excess savings, healthy job market. Unemployment rate is at a very, very historic low. We've had very solid nominal wage growth, reasonably, solid nominal wage growth. And with inflation coming down, that is translating in higher real incomes. And that is at the same time supporting consumer spending. We've had, huge appreciation in the stock market. So people are feeling wealthy. The wealth effect, and therefore can support consumption. So their fundamentals are very, very strong. What was, the point of my presentation was to really, we're at a point where we want to preserve these conditions. There's no reason why, recessions are not inevitable. Expansions do not die of old age. Economic expansions can go on, forever. And, the monetary policy is the dial that's trying, to ensure that it can go on as well because of, clearly huge social benefits. So the real key is, markets are expecting interest rates to go down. The FOMC has clearly signaled, that policy normalization is ongoing. What really is the big, the elephant in the room is, where do we land? What is that, what is the stopping point? We don't want to go too fast, but we don't want to also stop too far, because then, we cannot meet the inflation target. And that is really the uncertainty that the policymakers are grappling with to this. But the fundamentals of the U.S. economy right now look good. And, with other positive forces that are going on, there's a lot of reasons to be optimistic.
What is worse, or what is better? To land too hard or to stop too soon?
Yeah.
Wish I would have asked that question.
And this is recorded.
I'm just saying is that, a hard landing is hard, right? Hard landing means a recession. Most of the recessions that we have experienced, in history have been, in some sense, an inadvertent result of a policy tightening. That is just, it's very hard to do. Personally, I think the cost of unemployment are very, very high. There are very scarring effects to long-term unemployment, detachment of, from the workplace. There's huge social impacts beyond the negative, clearly economic measures that we measure. But at the same time, inflation is bad. I think everyone, I think this election showed how people hate high inflation. They hate high prices, right? And and particularly inflation is a very regressive tax. It affects low and middle income communities on fixed income much, much more than people who have things. So it's, so these are, really not two great choices. And it's very, very difficult to balance these trade-offs. And I think we have been, very, very fortunate in many ways to have had this configuration, to be able to land the plane,
So we can count on you to stick the landing on this.
So I came back from Switzerland.
So one of the things that, was brought up was like this entrepreneurial, Dr. Spinelli, you brought it up, and I'm wondering if it's contributing to some of the workforce challenges that we're facing. Is like there is an entrepreneurial spirit with our young professionals. And if they are not starting new businesses, it's in their realm of reality, and they have that, they have that kind of aspiration, and you see them, going from one job to another, and the competitive nature of the low employment rate, I think all employers are facing. And so I'm wondering if, what you were talking about, Dr. Spinelli, Carol, are you seeing it in the venture world? Are you seeing it in, when you are when companies are just starting up and, trying to develop? How is that, low employment rate impacting you in a real sense? I mean, I can go on and on how it's impacted me, but really, because I think when the rubber hits the road, you can start businesses, but if you can't find employees, you're not going to do well.
Yeah, I think in the industries that we've been operating in, and maybe this gets a little bit to what Dr. Spinelli was talking about, is there's been low unemployment, but not so much in the tech world. Because of high interest rates, enterprise buyers pulling back a little bit, the startups in the technology world have really pulled back on growth, trended towards profitability, which meant a lot of them, and you read about it all the time in the Boston Business Journal, have been shedding employees. And it's been a little bit tougher for those people to find a new job, where it wasn't in 2021. Everyone was quitting and getting 6 offers. I'm starting to see that modulate. People are finding jobs much more quickly, so I'm very hopeful. But I do think that sometimes leads to entrepreneurship, and we have been funding a number of very young business people. We try to stay very close to the universities and the research centers for exactly that idea. These are the people who are coming out with good ideas, and many of them are saying, I think I want to start a business. I don't really necessarily see great job opportunities, and I think I can do something better myself. So we've absolutely been seeing it. I do think that the rate of employment in the tech industry is getting a little bit better, but we've kind of had almost, we call it, even though there hasn't been a recession, we've called it a SaaS recession. So there's been a sort of a little bit of a recession in the SaaS industry.
Caitlin, what are you saying?
Maybe a couple additional thoughts is I very much agree with Carol in terms of what we're seeing in the startup space. A couple of years ago, particularly during COVID, it was the opposite. It was an extremely tight talent market. And maybe 2 learnings from that is that startups were extremely creative and sort of open in how they would staff. So we saw we did research on this dramatic rise in sort of contract part-time workforce, many of which have stayed, really leans into a generational interest in more of a portfolio life, more autonomy, more flexibility. I think the second is, small tech more than big tech maybe now has been pretty open to experimenting with hybrid virtual teams companies. And so those are just, maybe 2 examples of where there are lessons or inspiration to take from the flexibility, agility and creativity of small companies in rethinking their workforce, at a time at which it was driven by market factors, but I think is also sort of a call to where we see the workforce over time. And I know many large companies here are adopting or experimenting with many of those as well.
Can I just piggyback on this? This is very important also on Carol's point, about the little bit of a recession vibe in the tech sector. That's a great point. We see this in the data. It's very clear. What's interesting is that, I think it can be explained by the fact that, during the tight labor market right after pandemic, companies hired, and then you knew how hard it was to hire, so you hoard labor, right? You once you have labor, you keep it in, even if you're like maybe thinking you're overstaffed, you're hoarding labor. It takes a while for you to realize maybe I do not need all of these, engineers or developers that I've hired before, particularly, because there's maybe less financing, higher interest rates are pulling, and then all of a sudden you have a bit of a correction. So, this is a very kind of a natural dynamics. It's a natural kind of labor market dynamic, but at the same time, you don't want that to be, if that's localized to a particular industry, that's all right. If that becomes a general pervasive phenomenon, then you can have, the sort of a recession dynamic, and we end up in a bad place.
So my next question is for Dr. Spinelli. The entrepreneurial, I had to reframe how I describe myself, because I'm an immigrant, but my father was an immigrant, thought he was going to be an engineer, and then ended up working for Korean Airlines as a luggage hand, and then opened up his, first dry cleaners, second dry cleaners, and went on to a manufacturing company. But absolutely, and so I have this stat of 80% of all new businesses in the U.S. are started by immigrants. I got that from Jim, who got that from MIT, but I like to cite Jim because he's more credible to me. And so, and I have to say that, I used to say, I like to think all immigrants are entrepreneurial, but sometimes they're do it out of necessity, but I'm wrong, because it's about the risk reward, because he did have a job at the airlines, and what he calculated was, I have a better, reward trajectory with the calculated risk that I'm taking. So I want to thank you for that, because I tell that story all the time, so I have totally reframed. I continue to be more and more, he's passed in 17, but I continue to be more proud of my dad. But, that mindset is critical, and, I'm wondering, as you see the entrepreneurs, because they're not just in the tech sector at Babson. What are you seeing in Babson outside of the tech sector that, your young students, and as you travel, what are the booming industries that you're identifying?
I'm seeing an interesting psychological change in their perspective on who they are. It's a little, let me be more clear. We used to say you got a job and you might do a gig on the side. And then doing gigs is pretty cool. I'll have sort of this portfolio of gigs. That is transforming into, I've got a professional portfolio of opportunities. And I understand across this spectrum that I'm going to do these, and then I'm going to experiment, and I'm this one, and then I'm going to go and do it. And we're seeing that across every business sector, every industry, that they're playing around in it. They understand how to drive some value and to get paid to create some value. And then they can pivot to where they want to go. And it is really from retail to services, it is across everything.
Caitlin, I know, Caitlin and Carol, I know you guys are, in the tech and venture space, but I've got to think you're seeing it too, right? As you are intersecting and talking to other investors, because it's not just the tech industry, all your work in AI. I've got to think that Glass, you guys must be expanding outside of the tech segment for AI, because it's just proliferating everywhere. So curious if you could share that.
Yeah, we really try to focus on industries that have pretty global impact, and where we've been spending a lot of time are in things like very maybe old line industries, manufacturing, supply chain, even transportation. In the sort of the cities, what's going on with cities and transportation, the built world, construction. These are industries that you don't often think about first. When you think about AI, I think everyone thinks about medical for sure, and in ChatGPT and things like that. But these old line industries, because of the pandemic and what's been happening geopolitically, really suffered a lot, right? We had shipping disruptions because of what's happening in the Middle East. There was all kinds of issues with supply chain, with the lockdowns. And so it was a huge wake-up call to them to figure out how to step it up and become more digitized. And so we see huge opportunity in those areas and have invested in a number of companies, that are tackling those old line industries. You know, One Base 2 creates digital twins of manufacturing processes so that manufacturers can, without having to change the manufacturing line, figure out how to reduce costs, figure out how to use less material, figure out how to produce more, be more productive on that line. And so that's an area that we're really focusing on, not necessarily maybe some of the things other people might think about. There's huge opportunity in those areas for digitization.
Okay, then what are you seeing in the space of AI with how how the startups are integrating it into use? Because, I agree with Dr. Spinelli. My son, his cohorts, it is what the computer was to me. Like once you got it, it was part of your core, work cadence. And so AI is just part of what they do. It's not a plus added on. It's integrated with everything, from posting to anything. So I've got to see, you're seeing that in the startups, like they're integrating in that.
Oh yeah, I mean, I'll highlight sort of maybe three factors, and you can figure out where you want to go. One is we've seen 5% of our companies 5 years ago had AI as a core capability or a core aspect of their model, and today it's 100%. I mean, that probably, and that's I think the second is that's across sectors. So we've historically supported companies sort of all walks of life, consumer all the way through biotech. Today we're about 80% in sustainability, food, health, financial services, and security and defense. And I think what we see is applications of AI in each of those domains pretty equally and very creatively. And I think the third is applications of AI, and this gets to your question sort of around maybe the less high tech, but to non-high tech problems, but really everyday problems. So we have a company this year that built her own application to support parent navigation. She has a child with special needs. It's an extremely complex care environment, and is building a business relatively low tech applications of AI to solve a very real problem that will scale relatively simply. And I think that is the third point, is that certainly what we see is that this next wave of AI is not only allowing for breakthroughs in really hard categories, which I think Carol was supporting, but also sort of a next wave of innovation of problems that have been hard to solve economically, but could be quite meaningful and great little businesses.
Oh, I'm looking forward to AI increasing the quality of my life. So, let's work on that. I've got one more question, and we're going to do a quick round because they're giving me the hook. Okay, he's right next to me right now. We're going to ignore that. So, quick 2 sentences. What's the biggest opportunity you see in the greater Boston business 2025 economy, and what's the biggest challenge you see, and how should we prepare for it? I know, in a paragraph or less. Egon, you can start.
I think you got to build on your strength, which is technology, advantage of the amazing education system, the pipeline of entrepreneurs and scientists, and the high-tech capabilities that are coming into the economy. Just as a little bit of a warning, I was at a round table with a sort of 6 or 7 top tech executives from the region. One thing they pointed out is the seed, the venture capital. It's a bit limited in here. It is still, Silicon Valley is the place to go. That is still the issue, that a lot of them, they would like to stay here. They would want to start the business here for a variety of reasons, and it's going there. And the other thing is affordability of housing, childcare, and things to attract the high talent here. And this is something that as a community we need to invest in.
Amen. I hope we solve all those problems for sure. And they can come talk to Glasswing if they need money. I think we in Massachusetts and in Boston have a unique opportunity to show the world, to sort of be the shining light of economic success with a social conscience, doing good for ourselves while doing good for others. And I'd love to see us continue to build on that and be the beacon there. And then I think it's time for everyone to hold on to their hats in terms of the challenges. In spite of the soft landing, I think they've got to be ready to be resilient and to change on a dime, because I think we're going to see a lot more in the geopolitical arena that's going to come up against us.
Lower costs and higher revenue and higher education. We get the beast under control and we expand our impact.
Thank you. That was succinct.
if we can't win on financial capital, I think Massachusetts can win on social capital, and that starts in this room. So being involved in the startup and innovation ecosystem personally through your company, through your institution is so, so, so meaningful to creating both the culture and the on-ramps and the social capital to make this ecosystem thrive, and we can all do that. And I think the biggest challenge is affordability.
Thank you for that. What a great, well said, Caitlin, and what a great way to end. Do we have time
Right.
for Q&A? Or?
No, I think that.
I know, I think we
we're
ate
at a
it
wrap.
up.
But
Sorry,
listen,
folks.
you know, at the Chamber, we operate at the intersection of public policy and business, and certainly focus a lot on Massachusetts competitiveness. So, Grace, that was a terrific closing question, because this conversation was exactly what I had hoped for. You know, as we've watched entrepreneurial activity and the data associated with what's gone on in the past few years, and Egon presented some great data that highlighted the role of entrepreneurial activity in driving the economic success that we're currently experiencing. And we heard Dr. Spinelli talk about the role of startup entrepreneurial activity in our future growth, that it has to be part of the equation. It has to be part of the strategy of the Commonwealth. So I appreciate the question that you close with. And, you know, as I think about it, it's not an either or between big established business and corporations and entrepreneurial activity, although, as Dr. Spinelli pointed out, there is a little competition for labor embedded in that. But when you think about it, you know, the larger organizations and the more established businesses, they want to be in a place where there is that type of entrepreneurial activity happening, where people are thinking about new ways to address society's problems or business issues. So I don't think of it as an either or. And, you know, to kind of close where I started, it just seems to me that as we think about our economic development strategy and competing here in the Commonwealth of Massachusetts, that this dimension of our economy, the entrepreneurship, is something that we need to nurture. So with that, please join me in thanking Egon, President Spinelli, Caitlin, Carol, and of course, our tremendous facilitator and sponsor from M&T Bank, Grace Lee, for all of what she does in her community. And thank you all for joining us today, and happy Thanksgiving to you and your families.